Hi, and welcome to Sunday Night Charts. We take a look at charts to help you with the trading week ahead. I'm your host, Steve Van Meter, and keep in mind the U.S. markets are closed on Monday and will reopen for normal trading hours on Tuesday. And there's a lot of bullishness in this data this week, a lot. So let's get right into it. Moving averages, colors on my screen, 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is the level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Well, let's start with the S&P 500, which went fully green after a little bit of red in momentum last week. The bulls said, no, sir, we have got this under control. And yes, they do, taking prices to new all-time highs, but not with a lot of strength in this move. If we zoom out, you can see, there was a move off the 50-day moving average, which I said would need to happen to confirm a continuation of this bull move since March. But you can see it's starting, it's losing power here. And this is kind of where you would see momentum start to slow down. But at least as of close on Friday, momentum is still turning up, but the rate of that is not obviously very strong. So will this roll over and tag the 50-day again, or will it rocket through there on in next week? Don't know, but the futures market will be open today, so we'll get a glimpse of that soon enough. Well, actually, probably right now, because you're watching that, looking at the futures. How about the NASDAQ 100? Following the S&P, super bullish. No end in sight for what people are willing to pay for price of equities these days. And what do we see here? Same story on the NASDAQ. It didn't get down to its 50-day moving average, but it followed the S&P 500 up. Again, the strength of this move isn't all that strong, but hey, doesn't mean it can't keep going. At some point, this will need to revisit its 50-day moving average. But so far, people want higher stock prices. Sellers are letting them do it. How about the Russell small caps? Everybody's super bullish on the U.S. At some point, reopening and a surge of stimulus checks that are going to be, well, at least they're hoping it lead to much higher earnings. But that's going to be a problem because earnings on a quarter for fourth quarter of last year to this of the year before are negative so far. So that is not looking good, but people aren't concerned. They don't mind. And even though the Russell has not seen its 50-day moving average since November of last year, it continues to grind higher without much effort. People continue to bid up small caps. Like I said, no concern in sight about any bad news here. At least they better hope there's no bad news, because that's ugly. How about the energy sector? Super bullish. This went back to bullish. Everyone, again, bullish on the energy sector. Do keep in mind, I happen to live in oil country, and around here I'm hearing rumors, little faint rumors, that there's going to be production is going to come back online. And that's something that people don't realize. This production was turned way down during the pandemic, and it was kept down. And well, when you drive prices up enough, so let's still take a quick look at crude, which is sitting just under 60 a barrel. When you drive prices up enough, well, producers will produce. They will take that deal. So I'm hearing rumors here. And if I'm hearing rumors out here in the Central Valley of California, you can only imagine there must be similar rumors going on in Texas. So energy stocks are sitting right at overhead resistance. Let's draw that line in. I forgot to save it from last week, but here it is. You can see this overhead resistance right here. And that is very clean look at where this is. So the bulls need to take this higher on hopes that there isn't an increase in production. And of course, those who are bearish, well, perhaps they are the ones that know that there is going to be an increase in production. And here's that supply zone. You can see this is where sellers have been at. So the question is, will the sellers make good on this, or will this bounce out the 50-day moving average, drive it through here, and get the XLE up to 56, which is where the bulls want to take it? We'll soon find out. All right, on to the financial stocks. Now, when we get to bonds, you can see, we all know that bonds have been selling off, especially if you're a regular watcher of the macro show. But financial stocks usually trade inverse of that. And while they're bullish too, again, everything you're going to see, risk assets bullish across the board, they're not moving up that much to justify the move down in bond prices. And where's XLF? It's just sitting right below its 1 year high. Is that the all-time high? Indeed it is. So it's sitting just right below its all-time high. Does not justify this move down in bonds that we've seen. It tagged its 50-day moving average, is sitting up here trying, and this is obviously a sell zone. So if we draw a little line here, because we don't need it to go too far, but if we draw a little line right here, you can see there is what is forming of a sell zone. And you can also see right below it, we'll just copy this real quick here. And we can see there's your buy zone. So you can see where buyers are at and where sellers are at in a very short-term basis. Here's buyers, here's sellers. What will happen? Well, again, I'm surprised that people are bidding up financial stocks given that banks aren't lending. But hey, how about utilities? They were once all red. And while the chart doesn't look super pretty on this, well, again, when everybody's bullish, everything gets bullish. See 6-month momentum, 9-month momentum are rising. 3-month momentum is negative, but turning upwards. The overall picture is clear. But like I said, on the chart, it's not that pretty. Let's zoom back out on the 1 year, and you can see this move here isn't super strong. It's just crawling up its 100-day moving average. It's sitting now just above its 50-day moving average, but not with a lot of conviction. I mean, it still looks like you've got a short-term top right here at 64, more likely to come down and revisit down here at 61 or revisit its 200-day moving average just below 61. Seems to me the more likely path, given the strength of that move, is very weak. How about industrials? No surprise. This one went from nearly all red in 1 week to all green. No surprise there because, again, the broad equity market is going higher. And that would eventually move industrial stocks, which are, where are they on here? Here they are. And they got below their 50-day moving average, but sprung back up, sitting right at overhead resistance here around just over $90 a share. And the 50-day moving average curling up, looking to try to provide some support. That's what the bulls want, is to keep that moving average rising, keep it as an area of support to drive prices higher. How about large gold miners? I mean, you think if there's all this reflation and inflation and bullish economy, that would be great for gold. And of course, the leverage play on gold is gold mining stocks, but you're not seeing that. We only have ultra short term go bullish on price, but that's not a signal to get excited about. Intermediate term flip bearish. 3, 6, and 9 month now are turning up, but are still turning up from negative. So is that really anything of strength to look at, to get excited about? Unfortunately, no, because you can see once again, and while they didn't get to their 50-day moving average, GDX got up near its 50-day moving average, spent several days there and couldn't get through. Major neckline you've got here is at 33, and then the even bigger one's at 31. Path of least resistance says it's going to revisit 33. If it doesn't hold there, well, then watch out for 31. That's where the buyers are at. If they're gone, well, then bottoms out along with broad market liquidity. How about emerging markets? You want to see something super bullish? This is EEM. There's maybe one of the things that people are bullish on the most, and this is a dollar trade. You know, if you're bullish on the dollar, and I want to show you this, then you should be bearish on EEM. And if you're bearish on the dollar, then you are bullish on EEM. And you can see if we zoom out here a little bit, that this move higher in EEM is all because of the dollar. So again, depend on your view of where the dollar is going. If the dollar is going higher, then this is going to get massively reversed. Dollar's going lower, then you've got a multi 8-year breakout forming here, and much higher prices, much weaker dollar. If you tune into the Monday macro show special, and of course if you're a long-time viewer of the macro show, you know my view on the dollar already. But there's what's driving EEM. How about, the ugliest one here now is long-term Treasury bonds, or TLT. Of course, Bond King's favorite, and it's nobody else's favorite right now. It's bearish across the board, no change in that. But the 3, 6, and 9-month momentum have all gone negative and are declining. The 12-month only remains positive, and not by a lot. So let's go look at TLT. Again, what's interesting about TLT is if you overlay the financial stocks, it should not be where it is at. It should be higher. In fact, we can easily do that with 30-year Treasury yields. You can see that really this thing should be under 1.9 and not at 2% based on where XLF is at. But nevertheless, sellers have driven it down. Maybe there'll be a reversal next week. It's sitting at support where the last known support is where, well, the Fed was buying back in the throes of the COVID crisis and sitting at the top of this pattern here where this is where the CTAs last sold at the quantum computers. So we're seeing prices being driven down. Sellers are willing to take a lower and lower price. They seem to not care what price. They seem lower is better. They don't seem to mind. And why are the sellers driving this down as well? They're trying to get the people who sold here, the CTAs, which have already sold, to sell again. They're gone. So the question is, who's left to sell treasuries? Well, I imagine we'll be finding that out because they're doing it in the pre-markets. This is what also is interesting. In the overnight markets, you see overnight selling. Here's an overnight buy, overnight selling. So most of this is in the overnight. Not a lot of it is during the day, although what we saw on Friday is people in the U.S. market lose out. They just gave up. Here in a 1 minute tick, 1.5 million shares exchanged hands. You can see that U.S. investors, those that do own, are thrown in the towel. They're done. Who's left to sell? Well, I don't know. But when everyone's sold, and when you take an account that QE is bond bullish, well, you know that's going to get reversed at some point. High yield bonds really just follow the broad equity market. And of course, we'd expect them to be super bullish, and they are. Let's take a look at the high yield. And they're just crawling up back near getting close to near their 1 year highs. And people are paying a huge premium for not a lot of yield in the high yield space. In the past, that has never worked out for them. How about gold futures? A little bit better picture than gold miners, nearly bearish across the board. No changes there. 6 and 3 months are negative, but rising. 9 months is positive. Let's take a look at gold because the next destination for gold is 1800. Again, can't get over its 50-day, can't get over its 200-day, can't get sustainably over its moving average. The next path for gold is 1800, and if it doesn't hold there, which at some point it won't, it's down to 1750, which there was quite a bit of buying there. So that would expect to be a level of resistance unless those buyers there or the sellers that were there. Well, we see there were sellers that got broken out. So the question is, will the sellers come back that sold here, or will the buyers that bought there be eager to go? Time will tell, but the next path for gold is likely 1800. How about silver? A lot different picture. People bullish on silver mainly because of the Wall Street bets short squeeze. I don't know if it's still going on or not, but you can see compared to gold, this is prettier chart. And as I've said, it runs into resistance right here around 27 to 28. And after popping up, there it is stuck there. Silver tends to follow gold. Likely you will see silver at some point retest this 25 level where there was support. But right now, resistance 27 to 28. No way that it seems to be pushing through that. Last on deck, we've got the dollar. Other than bonds, dollar, the next most hated asset class. Not a really strong picture here, but I can tell you there's some very early signals that they're too early to call here, but we're starting to see some signals in dollar's bottom. 3 month and 6 month momentum are negative and falling. 9 month is negative and rising. 12 month is negative and falling. Let's look at the charts and see, is there a dollar bullish coming here? Well, possibly. We see it break over its 50-day moving average. That's usually where you want to see a start. It didn't get up to its 100 or 92 as I thought it would, but it came back down, and look, it's holding support right on the top of the supply zone. Very important, right where its 50-day moving average is. If the dollar can hold here and get some move up, you're going to see a shift in momentum. You're going to see a shift then in price. You'll see momentum shift first, then price. And so far, this is not a bearish picture from the dollar. It's too close to call. It's not saying bullish or bearish, but the initial signs, the very, very early stuff that I just can't really show you in this show, but will be coming hopefully soon in a newsletter where you can see it in a more granular state, that we're seeing almost the very early signs of the dollar flipping here. The broad equity market absolutely does not want that. Anyways, I'm your host, Steve Van Meter. Thanks for watching. Stay tuned for the Monday macro show special. And then we'll be back on with our normal macro show on Wednesday. The content of this video is provided educational information, is not intended to provide investment or other advice. It is not to be construed as recognition or solicitation by a security financial instrument or to participate in any particular trading strategy. This video was prepared by Steve Van Meter. Personal capacity opinions expressed in this video that do not affect the view, Atlas Financial Advising, or Steve Van Meter Financial.